Guys, today we're gonna discuss Appendix B, which is using sales tax. Sales tax is one of those important things that we need to do. All right. For those who raise in, I will answer your question later on after my video. Okay, so I'm going to be Appendix sales tax accounting principle using 9 editions of the Wiley Plus. Okay, this is owned by Wiley Plus in terms of copyright. Okay, let's start explain Appendix B here. We have about four objectives. The first one is explain the different type of sales tax. We call sales tax collected by business on goods and services. We call sales tax paid on purchase of goods and services. And record the remittance of sales tax. This is very important, guys. I have a company called Arahat Capital in my personal company. I used to sell product in Amazon and eBay as well as in Etsy and other online platform. I incorporate that asset when I was working for Travels Canada and BMO as well as RBC. I use my asset company as well, incorporated for the purpose of tax. Okay, and let's say learning objective number one: explain the different type of sales tax. What is sales tax? Let's look at this. GST call it federal sales tax on goods and services. A business must register GST and it provides goods and services in terms of service to Canada and in revenue more than 30,000 in a year. Okay, so that is the key part. I think I have mine. Let me see if I can give you guys an example here. This is one of my example of my company. This is my there you go. This is the one. This is my company that I can see. Call it. I have a CRA every year. I need to file tax return by the end of 6 months. It's called Arahat Capital. They give me a business number. It start with RT. If I don't file a tax, they're gonna email me and send me a reminder to pay. So this is required every year. If you are Canadian citizens as well as American citizen, regardless wherever you are, if you are residing, let's say you're living in Amazon jungle, or you live in Zimbabwe, you live in Java or Thailand, you still have to file your income tax every year. That's the key part. Okay. Okay, that's it. Let's go back to the detail here. Register can claim credit GST paid on all goods services purchased against GST the invoice. So basically, you can swap it. What you pay and you collect, you're gonna exchange it. You pay the net. For example, I collect when I was a consultant for Travels Canada. I collect about let's say 10,000 taxes in terms of the GST, HST because incorporated, right? Then I also to pay my expenses for 5,000. So I collect 10,000. I pay 5,000. So I have to pay the remaining 5,000. That's the key part. Basically, you net it out. Okay. GST is typically 5% on most transactions. GST payable to Receiver General Canada. Okay. HST, which is combined tax. HST appear on Ontario, Nova Scotia, New Brunswick, Newfoundland, and PI. These are the provinces that combine all their provincial sales in with general GST. The collection agent for this is called Receiver General of Canada. Okay. The provisional for another type of sales called provisional sales tax (PSC) is a separate tax charged in certain goods and services in BC, Saskatchewan, Manitoba, and Quebec. Its percentage varies from province to province. Provincial sales tax are remitted to the Minister of Finance in each province. Okay. That's learning objective number 2. Recall sales tax collected by business on goods and services. Okay. And in sales tax collected are not a source of revenue for a company. They are collected on behalf of federal and provincial government. Sales tax is a liability. Again, sales tax is a liability, guys. Remember that. It's not a revenue. It has to be remitted with appropriate government at a regular intervals. Okay, that's the key part. Example here, 250 cleaning service provided for a company in Monterrey subject to PST, 7%, GST 5%. Gas is 280, service revenue is 250. You got PST 17.550. How are you going to calculate 250 times 7%? 1750, GST 250 times 5% is 1250. So this is the tax. Okay, this is not your income here. This is your liability to government. And the again is located provision in HSC. The exchange payable fund would be instead of PST and GST payable account. Okay, that's the key part. Next one, objective number 3, equals sales tax paid to purchase goods and services. Okay, objective number 3, PST is not typically charged on goods purchases for resale, except in Quebec. Okay, Quebec is a province that speak French. It has a different jurisdictions. One of those unique province in Canada. Okay, PST is charged to business that use taxable goods and services in their operations. Business must pay GST and PST to purchase merchandise that can be offset against any GST that invoice. Okay, when merchandise is purchased for resale, GST or HST or QST, Quebec, okay, HST harmonized sales tax are not included as part of inventory cost. That's the key part. GST must be paid debit account sales code GST recoverable. Okay. Example, again, store purchase 4,000 merchant sale, Manitoba account merchant inventory is 4,000, GST recoverable 4,000 times 200, which is 200 here, debit, account payable will be 42,000 credit. So this is to record merchandise purchase on account. Remember that. Sales is not recorded. Now, HST is charged to HST account recoverable amount will replace HST recoverable. Okay, office supplies, example, purchase amount 200, tax before tax 6%, 5%. So you're gonna put here total supplies 212, GST recoverable is 10%, $10 debit. So the cash is 222. So this is, remember, this is how you're gonna do it in the booking site in terms of posting journal. To record purchase supplies is 200 times 6%, which is $12. This is where you get that 6% PST. Okay, for the Manitoba. Okay, the next one will be record remittance on sales tax. GST and HST must be remitted to Justice General for Canada. PST is remitted to Ministry of Finance. So this is the difference. GST and HST is for Receivable General. I'm in Ontario, so I always do the Receivable General payment every year for the last 20 years for my company called Arahat Capital Limited. PST is also remitted, but PST, however, is remitted to Ministry of Finance. This is the difference, okay? Example here, remittance of tax GST, retail store in BC involves GST and all of its sales, and GST and all sales purchase. In the end of quarter, they have following balances: GST recoverable, which is 12,000, GST payable, which is 20,000. Company GST return, how are you going to book it? GST payable is 20,000 debit, GST recoverable 12,000 credit, plus 8,000. So that's how they put it there, okay? And then when you allocate, it would use the same one, which is HST and payable and HST recoverable. Then look at the example, the next one, total PST invoice by retail store in British Columbia, quote is about 28,000, entry quarter remittance, which PST payable, debit 28,000, cash is 20,000 credit. So this is to record the PST posting. So that's basically conclude the sales remittance. But at the end of the day, you have to pay tax every year, individually or if you're incorporated. See, I have to do the same thing. When I was a contractor for Intag, for IBMO, I do the same thing. Okay, that's the key part. For RBC, is the same story. That's the key part. Okay, guys. So this is basically conclude this chapter for sales tax. This is owned again by copyright John Wiley. I will post it in the YouTube as well as in Edpuzzle for you to review. Okay. Thank you. Bye bye.